Man, I'm always a big believer in resi for equity and commercial to park for cash flow. Now, you can make great gains from an equity perspective in commercial, but man, the returns that I've seen in the time frame that I've witnessed that happen in residential, to me, is unmatched. It's also, in my opinion, a lot easier to predict. I like to build out a residential portfolio, liquidate, and then roll into commercial. I was always a big believer of rolling into residential cash flow. Going back even sort of 12 plus months, the areas where we were able to buy deals, either uniblocks and renovate, duplexes and renovate, buy a house, renovate it, build a granny flat on it, those sorts of things. Man, I was netting yields in the 7 and 8%. It's like nets. So like when I was hitting yields like that in residential, to me, it was a no-brainer. But then market growth combined with areas and locations that were actually capped from that perspective, from a yield perspective, or actually the ability to actually granny flat a deal as well. When a few of those areas and markets in particular went too far and we could no longer do it, well, then that strategy was now out the window. And so I saw that coming about 18 months ago, of the markets that we were going to move into for resi were no longer going to support the residential cash flow plays that we're going to do. So that's when we made the transition into commercial, and I started building out the commercial division, which we launched about a year ago. So